Hey guys, thanks so much for tuning in. We very much appreciate it. I have on the line a heavy hitter in the mining industry. His name is Jim Gowans, the former co-president of Barrick Gold. Yes, I said it, Barrick Gold, from 2014 to 2015. Of course, we know about some charges against Barrick going all the way back to 2002, and Jim's willing to talk about some of that right now. And he's currently the president and CEO of Arizona Mining, which trades on the TSX as AZ. It's a Canadian mineral exploration and development company focused on the exploration and development of the 100% owned Hermosa project in Santa Cruz County, Arizona. And their Taylor deposit is said to have significant zinc, lead, and silver deposits. Jim's here with us right now. Jim, how are you?
Good, very good.
I want to start with a tough question right out of the gate here. These accusations predate your affiliation with the company, but there was a suit way back going to 2002 saying that Barrick and JP Morgan manipulated the price of gold. It's my firm belief that there is definitely manipulation of the precious metals prices, primarily by the central banks, I think. But what do you make of that particular charge when, of course, gold back in 2002 was trading at a far, far lower price than it's trading today?
A lot lower. Sub 300, I think, as I recall it. It certainly went down to about 256 in about 2001, but
That's right.
So I'm not sure about 2002. I mean, I don't really buy that there was conclusion between Barrick and J.P. Morgan. I don't know the particulars. Of course, that goes back. I was with Placer Dome just prior to that, and of course Barrick was a competition. But so I know the management team of Barrick at the time, and I just don't see it. There was it was quite a team with a lot of high integrity. They were aggressive in terms of their hedging programs and stuff, but I think that was more the issue of what caused the gold price to go down. I think though all the gold producers had a tendency to hedge. If you only got one person hedging, it's a good way to take some volatility out of your pricing. But if everybody hedges, the central banks start to rent the gold out to pay for it. And I think that's what suppressed the price of gold back down. It took it down to the bottom in 2002 until people started unwinding the hedges. And so that's what happened, I think.
Well, yeah, in fairness, gold was trading, like you said, closer to 250, 300 back in 2002. I mean, if I could rewind time, I'd certainly be a buyer back then, regardless of what was going on. But let me ask you this. As it relates to silver and gold manipulation in the paper markets, we know Deutsche Bank has admitted to some manipulation over there in the LBMA. This past week, I think it was on Wednesday, we saw gold and silver slammed hard again, and I think it was 10,000 gold contracts, $1.5 billion in gold last Wednesday sold in 1 minute. Clearly, some entity doesn't want gold or silver to find real-world equilibrium with M1, M2, M3 money printing. What are your thoughts on that?
I think there is some of that. People trying to play the market, but I think at the end of the day, it's going to be it's a temporary thing. I think the fundamentals for both gold and silver are pretty strong right now, and I believe that when I was with Barrick, seeing the price going down to 1,100, you just knew it wasn't going to be sustainable, both from the overall average production cost, for most of the gold producers, and I think the uncertainty in the world when there's a lot of economic uncertainty in the world, and there certainly is at the present time. You get all sorts of craziness happening on, like the so-called quantitative easing and negative interest on bonds and the like. I think that then gold starts to act. People tend to buy gold or gold stocks, equities, as proxy for gold, as a hedge against the currencies that that they're losing their trust in, and I think that's going to continue. I think gold fundamentals are going to be strong over the next couple of years for sure.
Yeah, well, and our listeners are well aware of the fact that gold and silver in physical form have been money for 5,000 plus years. As the central banks at this point, all they do is print. All they can do is print. And in fact, we see some of the central banksters in the world tell us right now, Jacob Rothschild specifically has been saying he's selling equities and buying gold. George Soros buying gold. Some of the most
what's his name? Paul is in the United States. Is the politician that ran. He's coming out on that currencies that aren't backed by anything are fundamentally flawed, right?
That's right.
And I think there's going to be some adjustments. There has to be some adjustments at some point on that.
Yeah, that's right. Ron Paul.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back. My time is up.
Big fan of Ron Paul and his monetary, policy. It stands in stark contrast to printing. We'll print ourselves out of debt. Well, you can't print yourselves out of debt, especially when your Federal Reserve note is a form of debt.
It is, yeah, and there's a lot of U.S. dollars that are everywhere else in the world. If they start to come back home, it could be a pretty fundamental problem for the United States, I think.
Yeah, and we're worried about that as well, the potentiality of hyperinflation. Certainly inflation is starting to creep into the system. We've seen commodities on a tear this year. Has the performance of the precious metals, gold and silver year to date, caught you by surprise? And, of course, if we could just take away the last 2 weeks, the performance has been fantastic, with gold and silver really leading the way. And we'll talk about zinc, which it might surprise people to know has actually outperformed gold and silver this year. It's the best performing metal.
Yeah, that's certainly on the gold and silver side, your question. It hasn't surprised me. I mean, I felt that even as I was retiring from Barrick, that there was going to be a turnaround. You just looked in the world economies, and you just knew that the fundamentals were there for significant change in gold price. It wasn't sustainable at down around 1,100, 1,150. So it doesn't surprise me at all. I think you're going to start to see gold start to climb again because of the fundamentals in the world economy. So
yeah, well, I was listening to an interesting interview just the other day from my friend Jason Burak from Wall Street for Main Street. He had a guest on from Small Gold, and the gentleman was talking about the fact that if the Federal Reserve back in 2008, 2009 had been honest and said, what we're going to do is we're just going to print trillions and trillions and trillions and trillions of dollars, the dollar index, USD, would have crashed. But they didn't do that. They said they were going to taper, always threatening to raise interest rates. And if you look back now, they've only raised interest rates once. They haven't tapered. Now they're talking about the potential need for $4 trillion in more QE if there's an economic earthquake, which I think you and I both think may be coming.
Yeah, I agree. I think when you look at how much has been printed since 2008, it's actually quite a bit, quite shocking. And I think that's just a fundamental problem that everybody's kind of ignoring. But if it comes home to roost, it's going to have quite a dramatic effect on the U.S. currency and others, of course. I think it's not unique to the United States. I think there's been other significant players doing the same thing.
Yeah, there are. It's
a long-term problem. It's a fundamental problem, right?
Yeah, and so many of the experts I speak with call it the race to the bottom. The Japanese yen. What's going on in Japan is certainly part and parcel to what we're talking about. And if you look at what's going on in Venezuela, we can see how painful inflation of the currency and ultimately hyperinflation is to an entire population. It can bring a country to its knees.
Oh yeah, I was living in Africa, in Botswana, and looking over across the border into Zimbabwe, watching hyperinflation to the point where people were collecting $1 million bills that were worth like nothing for Zim dollars, they called it, and then Zimbabwe basically stopped printing it. They just started using the U.S. dollar as their currency. And so that that's a problem in itself, because that U.S. currency is never going to come back to the United States. So so they're almost relying on the fact that Zimbabwe and other countries that have that hyperinflation are doing that. And if that stuff does come back to the United States, I think we have a serious problem.
Yeah, I like to joke, Jim, that I'm a trillionaire in Zimbabwe dollars. I bought a couple of those 2 trillion or 5 trillion or whatever they're trillion dollar notes off of eBay.
I had a few friends of mine from Zimbabwe that were trillionaires. They had quite a stack of them. It was a collector's item over there when I was there.
Yeah,
So it's
that's
fun.
right. That's right. Well, and I've heard recently that just a couple of grams of gold in physical form in Venezuela right now will buy 6 months worth of food. I've not been able to vet that out as fact, but it wouldn't surprise me a bit when the
Oh,
paper
that wouldn't
currency,
surprise me at all.
right, when the
Yeah.
paper currency becomes worthless, people flee to something tangible. Be it
They either go to and trade in kind, or they go to something more fundamental. In Zimbabwe, they went to the U.S. dollar, and other places will go to trading in kind commodities or work or some other like gold.
right. Let me ask you this. What do you think the gold and silver equities have been telling us this year as we watch big money flow into that space? I mean, at one point, Barrick was up 400-500% this year. First Majestic was up 600-700-800%. Coeur d'Alene was up nearly 1,000%. The GDX, the Huey, the GDXJ have all been top performers this year. What do you think that is telling us?
I think that's telling us that people are concerned about currencies. I think when you see gold and silver equities, which are basically proxies for the metal, right? It's a much more convenient way to invest, and they see gold and silver, or this is my belief anyway. For the most part, they see gold and silver as a much more reliable investment than say the bonds from all the central banks and the like. So,
That's right.
And I think that's what's been driving the gold and silver equities over the last year. As the price of gold comes up, you also see more people actually moving into gold and silver equities as a proxy, and of course it's a more convenient investment vehicle. Right. Than owning physical gold. So at the current time, I think that's what people are doing.
Well, and again, this past week or two, we've seen the equities absolutely ripsawed. We're seeing some big corrections in the gold and silver space. But I want to remind people, I just started talking about the gold and silver equities again recently, Jim, having people like Keith Neumeyer on from First Majestic and others to talk about the fact that the big money, the Wall Street money, the deep-heeled, deep-pocketed global investors are moving into that space in earnest, because I think that the bond market, which you just mentioned, is ready to tip over. Michael Oliver, who we just interviewed, says the bond market is about to pop, and when it does, mountains of money may start pouring into the commodities and the precious metals. And I think the move is already begun.
I think it has begun. I mean, when you have bonds at negative interest rates, there's something fundamentally wrong with the economy.
Yeah.
That's a statement of the relative safeness of currencies, right?
Yeah.
And when people actually feel they can buy that bond and pay money to keep it in that bond, they just because it's a safer haven than some of the other investments. That's pretty bad.
Yeah.
To be honest.
Yeah, and you know what? Just as it relates to the manipulation that we've seen this past week with that $1.5 billion in gold dumped on Wednesday, I just want to say this as it relates to corrections in the equities, silver and gold, precious metal space. For anybody who got into Apple when it had a $6 billion market cap and was trading for $12 a share back in 2000, 2001, you felt like a genius when you sold it at 48 after it went up 400%, or if you sold it at 100. There were corrections along the way as Apple ultimately went to, I think, over $2,000 a share.
Right.
I just want people to understand that these corrections, be they manipulated corrections so that the smart money can buy more shares cheaper, or just real-world actual market corrections, these corrections are part of the bull phase. It's to be expected, and I sure hope people don't get filled with too much fret as we see these prices heading down over the past couple weeks. Because ultimately, and I want your take on this, ultimately, where do you think the prices of the precious metals, gold and silver in physical form, and the mining equities are going? Because there's so little money. I think I just read the other day, Jim, that the global market cap of all gold mining stocks right now still is not as high as Apple's market cap.
Yeah, no, that's correct. And when you look at the weighting on the various indices, I tend to watch the TSX Canadian indices. It's been underweighted. Gold is still underweighted. Gold or gold and silver equities, so you're gonna see that come up, I think. There may be some short-term manipulation, but at the end of the day, I think the fundamentals are strong. What's going to happen with the gold price or silver price? I don't know. I do believe it's going to go up, but to what extent, I don't know. But definitely, I think it's got room to climb. I could easily see a $1,500 yet over the next couple of years for sure.
Yeah, absolutely. I think probably sooner than that, given
Yeah.
given the tumultuous nature of the global economic picture, which seems to be deteriorating by the day.
Yeah, it's getting worse rather than better right now.
Yeah. Okay. And regardless of what Yellen says, I mean, that's just nonsense.
Yeah.
There's nothing she can say that will stitch this thing back together after they've been printing so much money. I think it would surprise people to know, Jim, that zinc has outperformed gold and silver this year. Wasn't it up like 35% year to date at one point?
Yeah. Well, zinc went from 66 cents or thereabouts up to it hit a high yesterday, I believe, at about $1.05 or thereabouts. So it's that's a pretty significant jump. Yeah, it is more than 35. That's almost a 50% jump. But I think it's interesting because I think that's driven by some really key fundamentals in supply and demand. There's the Chinese economy slowed down, and Chinese produces about 50% of the world's zinc. But by the same token, it didn't stop, right? And and at the same time, you had significant producers of zinc basically shutting down mines that just basically ran out of ore. And the two that come to mind is Lachine in Ireland, which took out 200,000 tons of annual production, and the Big Century mine in Australia, which was 500,000 tons of zinc concentrate. That's a lot of concentrate just to drop off the market. And then adding to that, you got two other issues where Glencore have pulled back their high cost production because of the low price, and the Chinese government took the opportunity to shut down some of the really environmentally bad run small zinc mines. They have a myriad of small zinc mines in China, and that are very bad safety records and environmentally not operating particularly well. And so they've basically taken the opportunity to shut those down. I don't think you will see a lot of those come back up, or if they come back, they'll come up back very slowly because they'll have to fix some of the concerns with them. Yeah. And so that's created a real shortage. When you look at the treatment charges of zinc concentrates, they've been more than halved in the last 6 months. Just shocking, and even if the price of zinc stays at the where it is at $1, and I believe that's probably a good long-term price, is about a plus or minus $1, and the treatment charges are making it such that zinc producers, zinc concentrate producers right now are looking pretty good, and you can see that being reflected in the fundamentals like Teck, which have the Red Dog mine, the world's largest zinc mine, and their stock has gone up 300-400% in the last 6 months. So I think I think zinc has got some great fundamentals. There hasn't been a lot of investment in new zinc production for a long time. We're probably one of the most significant zinc projects right now in the space, and so I think there's going to be there's a net shortage being predicted over several years, and both in zinc concentrates and zinc metal. And even if the economy does slow a bit, it's not going to be enough to make the supply and demand curve balance out.
Yeah, well, I know your Taylor deposit has zinc, lead, and silver, and of course, I'm a huge silver bull. So are many of our listeners. We love gold, we love silver. But tell us about zinc. My knowledge of zinc is kind of limited in terms of what it's used for. I know that our pennies used to be made out of copper in this country until about 1981, and now they're made primarily too expensive. So now they make them out of zinc because, of course, they continue to demonetize our currency, and they don't even want us to have metal in our pennies anymore.
Well, in Canada, we don't even have pennies anymore, right? They don't
that's
even
right.
use it. When you go to a store, you don't get pennies. They just round up or round down to the nearest nickel.
Yeah, that's right. Well, they want to take away the $100 bill here too, if we let them. And hopefully, people won't be that stupid to let them take away our paper currency. They want us on electronic currency. So if they don't agree with your politics, they'll just turn off your card. I think is where we're headed. But what our listeners like are tangibles. Tangible, physical precious metal, physical. So what is the deal with your Taylor deposit, the zinc, the lead, the silver, and what is zinc most commonly used for these days?
Well, let's talk about zinc first, because zinc is, I started out in mining, over 40 years ago with Cominco, which is a big lead zinc producer, right? And spent almost 20 years with them, with Cominco / Tech Cominco. And zinc is a fun metal from a standpoint of consumption, because if you look at lead, or you look at aluminum, or you look at even iron or copper as an example, there's quite a bit of recycle. So that even as the economies grow and the consumption goes up, that if the price goes up too much, you can recycle. Take wire or lead batteries and stuff. They just come back into the marketplace. Well, if you look at the major usage for zinc is the great metal, because you really don't recycle a lot of it. 60% of zinc single usage is for galvanizing or for corrosion protection. Just by the very nature of that, zinc dissolves in favor of instead of the iron or the other metals, right? So, and you don't recycle that. So that's that even if you could recycle 100% of the rest, it's only going to be about 40% recyclable, right? Whereas copper and lead and aluminum can go up really high, right? And so that's what I think is great. So 60% is for galvanizing, so it goes into all the or chemicals of paints that go on, or they dip the metal. Like cars are fundamentally probably got more zinc on them than they ever had, because they're required to last longer. Mm-hmm. And then you got about two other major usages, or three other major usages, and they're all around about anywhere from about 8 to 15%. Zinc is one of the two major components in brass, which can be recycled, but anything that's made out of brass is consuming zinc. And then zinc has got a unique feature, is that when you can cast zinc with very thin walls and make very accurate reproductions. So your fixtures and faucet fixtures and all these fancy looking things are typically thin wall die casting zinc alloys, because you can make very accurate castings. That's, you look at fundamentals. If you're a kid, Dinky toys or Corgi toys or any of these small cars that they run around that are cast, that's basically zinc, because you can have very great detail and very accurate in the zinc. So that takes up about maybe about 15% of the marketplace, and then zinc is a nutrient that goes into fertilizers too, so zinc chemicals. So those are the major usage, but by far and large is galvanizing. So and it can't recycle it once you use it as in either galvanized or in or zinc-rich paints for corrosion protection. It's basically done, right?
Well, given your pedigree in the industry, Arizona Mining is definitely a company to keep an eye on. So let me ask you this before we lose you. The Hermosa project, the Taylor deposit, given the in-ground metals, what do you think the company should be worth, and what's the company worth today? I think it's trading on the TSX as AZ.
Yeah, we're trading as AZ. I think we hit a new high yesterday. It's fallen off a little bit, it's running between 215 and 220. Obviously, if you look at our current resource that we published in February, was about 40 million tons at about 4.5 lead, 4.5 zinc, and over 2 ounces a ton of silver. If you do an NPV or NAV of that value, it's multiples of what our stock price is running now, and our goal is to try and grow that resource, and that's the purpose of our drilling program. We put out some announcements showing some of the successes we've had on the drilling program, and we will continue to grow that. We've got quite a bit of land right now, and it's private patented land, so it's much easier to do permitting on private patented lands, which goes back to the days Arizona is very mining friendly, generally speaking, mining friendly state. So I think that all bodes well for our growth of the deposit itself. It's probably the only significant undeveloped zinc deposit in the globe right now. Certainly, and it's in a strong mining area. And when you look at the people that are involved in Arizona mining with myself, our guy that's running our exploration program was a VP of exploration for BHP. Our permitting guy was the guy that permitted the Hale project in the Carolinas. So and Richard Warwick, our chairman, has been involved in mining projects for 30, 40 years. So I think when you look at the actual team, there's a lot of experience on our team that we can take it to the end and positive feasibility, and it'll be a zinc producer at some point in time in the near future. So.
Well, very good. I have one last question for you before we let you go. I was just reading a paper from Commodity Discovery Fund the other day, and the title of the paper was IMF's Substitution Fund to Kickstart SDR as New Global Currency. Let me just read you this first line, Jim, and I want to get your thoughts. As we see China hoarding gold, and we hear China verbally telling the world that they want to play a big role in whatever monetary system is coming next. The paper says this: after 7 years of Chinese pressure, a plan allowing investors to exchange their U.S. Treasury holdings for SDRs through a substitution fund is being discussed. What do you think is coming next? Do you think that ultimately the petrodollar, it's long in the tooth. It's not going to be the world's reserve currency, I don't think, for very darn much longer. What do you think is coming next, and how do our listeners protect themselves and protect whatever wealth they have?
It's an interesting question, because I think, the petrodollar, we're using the U.S. Dollar as a kind of a standard. Even we call it a petrodollar, but you look at the current quoted prices for even commodities are cents per pound. It's all done in U.S. currencies as a standard, right? And I think you're gonna start to see other currencies are going to be start to bounce off. Right now, there's basically one single currency that everybody kind of compares to, but I think with all the printing of paper money and the various currencies, I think you're going to get more of a balance of currencies, and I think the petrodollar is kind of falling away, right? So I'm not too sure what's going to happen, but I would be a bit concerned about that.
Yeah, I think one thing's for sure: it's this paradigm that we've seen since 1971, when Nixon took us off the gold standard, isn't going to continue for another 45 years, is it?
No.
Yeah.
No.
Okay.
No, I think it's a bit of it's fraught with fundamental flaws, right? So.
Yeah. Well, guys, I really do thank you for listening. And Jim, thank you so much for your time. Again, just shout out the name of the company and the ticker so people can follow you.
It's Arizona Mining, and our ticker is AZ. It's easy to remember.
AZ on the TSX.
Yes, like the alpha and omega, it's the beginning and the end, right?
Yeah. Well, very good. And, I really do appreciate your candor and your straight shooting. Thanks for answering the tough questions up top about Barrick, and thanks so much for your time. We very much appreciate it.
Thanks, John. Appreciate it.
And thank you. And guys, thanks so much for listening. And check us out at sgtreport.com for real news 24/7. Have a wonderful week ahead. God bless.